Welcome, everybody. We are here today with the legendary Adam Back, cypherpunk CEO of Blockstream. Adam, thank you so much for taking the time to join us today.
Sure. Up to you.
Super excited to have someone with your technical mind with us today. A lot happening in the Bitcoin space right now. Not that Twitter is necessarily real life, but we see a lot of back and forth about what's currently happening with implementation. We have Bitcoin Core, we have Bitcoin Knots. People talking about, is Bitcoin just a database? Is Bitcoin just money and that uses a database? Your thoughts on the current drama? Is it overblown? Are these sorts of flare-ups necessary when with something like Bitcoin, where we have to figure out different ways to build consensus about what sorts of implementations we want to run?
So I think there was some not very well done communication about a feature in Bitcoin, like a filter that limits things that look, that could cause denial of service or memory, or So there are some filters that have been there for years, and the op return was a big source of discussion quite some years ago, where there's a 40 byte versus 80 byte debate, and generally, the blockchain is for transactions because it's very optimized for that specific purpose, and a lot of effort and developer ingenuity has been put in over the years to save a few bytes here and there off of the transaction formats. So now there are sometimes sort of wallet reasons to put a little bit of data to sort of coordinate a multi-part thing or negotiate some key exchange kind of feature, which is why the op return was limited to 80 bytes. I think originally I thought 40 would be enough. Some people were saying, oh no, this kind of key exchange might need to be more like 64 bytes, so they put it up to 80. And so of course people also put JPEGs into the blockchain and other things from time to time, but since Taproot, they have taken to put in that image data into Taproot, and the Taproot is a witness field has SegWit discount, but it's not a data block like op return, so they have to do some kind of tricks, like make a script, make it look like a script, and then just put a whole chunk of data in between something that's not going to run, like if zero, things like that. So that's what they've been doing, and by doing that, they get, for their data items, they get 4 times discount that comes with SegWit. So they're not actually using op return generally for larger things, because it's 4 times cheaper to use Taproot, to like abuse the Taproot or make a fake script in Taproot. And so anyway, that's the sort of history of op return, and there's a whole complicated thing where the filters are sort of have an intent, so that there's like an interest to discourage people from sort of filling up the chain with JPEGs and displacing transactions, but it's a censorship resistant system by design, so you can't really stop them. And and then the filters are sort of just about what gets relayed in the network. So the side effect of a filter is that it might slow down the relaying of that data, so it might be a bit disadvantaged. But because if only 1% of nodes relay something, then it won't relay as well. And so, but the other problem is because the existing filters prevent some things, like some kind of larger sort of de facto filters. So sometimes people are sending it direct to a miner, paying them out of band to mine something that is valid but not standard. Standard is the test for what would normally get relayed to a block. And of course the nodes have some parameters, and people can change the code if they really want to, but they can also just change the data size carrier that applies to op return. And so there are pools with different looks. So Ocean Pool has kind of tried to run a transaction selection process with a block which favors putting transactions in, and tries not to put any JPEGs in with the coding they recognize. And there are other pools that do the opposite, which is they have an API so that you can pay them to put, to fill the block up with JPEGs or make a huge JPEG that takes the whole block and silly things that wouldn't pass not just the up return filter, but other kind of sanity limit, about transaction sizes and things. So that's what's been going on. And I think actually what started the discussion is there's a interesting new sort of zero-knowledge proof related protocol called BitVM, which is being proposed by Robin Linus last year sometime. And it's not able to to verify a proof in Bitcoin script because zero-knowledge proofs are quite complicated things to verify, but it's able to sort of prove that there's something wrong with the zero-knowledge proof. They can sort of make a contest transaction like with Lightning. You put some money in a contract. If there's anything wrong with what you've claimed, then the other party can prove it, and then they can take the penalty transaction. And so it turns out, and so they started a startup called Citrio. Anyway, so this one develops that, and it has promising use cases, but it bumps into the 80-byte op return limit. Their use case, it takes a little bit more data. So that started the conversation about what they should do. And the other interesting thing is because they care about decentralization because it's a contest transaction for a layer 2. So they don't want to send it to a miner. They want lots of nodes to be verifying it and all the miners to process it. So they actually could send it different, which they put it in the up return, and then they put some extra parts of it in, I don't know, like pub keys of a multisig that aren't used to sign or something like that, which is not as efficient for the node, like the UTXO cache. It's like it takes up some memory. It's generally not a great thing. I mean, they're probably not super highly used, but still. So that started the discussion from developers about what to do, because normally it would go a different way, right? If it was a big data item or just, JPEG purposes, they would just do it centrally. But because here you had a genuine use case, they don't want to do it centrally, so they do it differently, and that has different side effects. So then that was the discussion, like, maybe the filters aren't working, just take them off, or will the filters work a bit, because it's friction, makes it a little bit harder to add JPEGs, they will have to do something different, but maybe the sides effects are starting to build up, or, so I guess it's either do nothing, change it a bit to support the BitVM case, or remove it, because they're already, people that send in large image files are already bypassing it using centralized miners, and that has a different side effects, which is it tends to make compact blocks less efficient. So there's a protocol for transferring blocks through the network when a block is found, and the way it works is you connect to your peer, and your peer doesn't give you the block, it gives you a list of transactions to assemble to make the block yourself, and then you just pull those transactions out of your mempool. If there are any missing, you fetch them from all your peers, and there you go. But because more transactions are coming direct from pools that are not passing the filters, they're not propagating as well in the network. So that is a different kind of side effect, and it's slowing down compact blocks. So it's a bit of a complicated thing. I think probably quite a lot of the drama was because it was communicated unclearly, and I mean, it seems to me, I'm kind of in the middle on it, that there are arguments either way. So sometimes when there are arguments either way, it's left to node configurations. People do their own thing, so it's not quite clear what's going to happen. But of course, I mean, the thing is, almost everybody dislikes spamming up the chain with JPEGs. So it's not what it's about, but people are equating it to that. That somebody's pro JPEG spam. Well, it's not the case. They're just saying that it's actually impacting use cases. It's impacting how well compact blocks work and stuff like that.
Does any of this really concern you in the long run? This can be a little bit stressful, maybe to someone who's new, seeing certain personalities in the space fight. Maybe they don't have a full technical understanding of what's going on. You, as someone who's building, obviously doing what you're doing with Blockstream, building on Bitcoin, is there anything that's sort of keeping you awake at night right now?
No, I mean, I think this would have gone better if it was communicate better. It came through the GitHub, which is like a developer issue tracking system, and some users got into that, and then they locked the GitHub because what was meant for like coordinate code changes came into a heated discussion forum,
Right.
and then of course people don't like being blocked, and like one of the technical guys from the like pool company actually got blocks, so I wasn't very happy about that, and there seems to be some disagreement between people. So we'll see how it turns out. I'll say generally things like that get left as a node policy. So different nodes can do different things. It was probably not optimal for different nodes to do different things. But, people don't agree on it. Maybe that's all you can do.
Okay, fair enough. So your build, like let's talk a little bit about what's currently being built on Blockstream. I think the last piece that I wrote on a product that Blockstream was working on was the BMN2. It was the second Bitcoin mining note that you issued, which was a super interesting product. Is there anything, maybe we could dive into that a little bit as well? So sort of securitizing the hash rate, if you will. Anything else that Blockstream is also working on right now?
Yeah, so we did the BMN one some years ago, and you may have noticed, or your readers may have noticed, there was an announcement that Blockstream Mining is now a separate company. It's like got spun out.
Okay.
And well, it's spun out, and so the BMN product is now, a product of Blockstream Mining. It's like a separate company, and there was some details about the fundraising in that announcement. So yeah, I think the securitization is interesting during BMN one. BMN two has been running for less than a year, but BMN one ran for 3 years, and
Yep.
it was about $50 million invested in it by a number of users, and then a market using SideSwap, which is a liquid sort of trustless limit order book. You can trade on that without custody. Use a hardware wallet to hold your assets while you're trading. So it's kind of one of the safest ways to trade, actually, in the Bitcoin space. You can also trade Bitcoin for Tether and things like that, but it became the go-to market for trading in and out of the BMN1 that was priced in Bitcoin. So people thought that about. It's not a really liquid market like Bitcoin, but it's there was about 50 million traded during the product life cycle compared to 50 million in, and then it ended up making, a bit more like 80 million out, and many people invested using Bitcoin, and so it actually did quite well, even on that basis. It did about 30% increase on Bitcoin during the 3-year term,
Right.
so 10% a year, which is generally, that's pretty hard to do. So it's a good result. And yeah, so BMN2 is in market now.
Super cool. Excellent. This idea of building capital markets on Bitcoin, I hear the Bitcoin office in El Salvador talk a lot about it. But I'm also kind of curious. There's at the same time, we're seeing, obviously some of the fighting going on right now. We're seeing people talking about, changes that might be made, that need to be made to the Bitcoin base layer to help it scale more. I always sort of appreciate any sort of technical insight on this as someone who's not as technically minded. As we're sort of potentially still making changes to Bitcoin itself, does it concern you at all? As we're sort of building financial products on top of it, we're building a new system on top of it. Does it sort of unnerve you at all to sort of have these conversations about potential changes to the base layer?
Yeah, I mean the opera term is actually just a policy, so it's not changing the consensus code. I think the riskiest thing to do, and the riskiest area of Bitcoin code change is the consensus logic. So that's being enforced by all nodes. But there is an interesting conversation to be had about ossifying the protocol. And so I guess many people would aspire, and I'll subscribe to that eventually the Bitcoin base layer gets ossified. The problem for the short term is its current sort of flexibility makes it, is a bit limiting for what you can build in layer 2. And, if we want to support additional use cases for Bitcoin the asset and scalability, privacy trade-offs, those kinds of things, then having a layer 2 is quite important. So I think there's generally fairly widespread interest to see, more layer 2 innovation, and it continues. People thought originally that Lightning was it, but there's Liquid, which is sort of securitization, trading, settlement, all the securities in Bitcoin and stablecoins that Blockstream works on with Liquid, and a number of startups that build on the ecosystem. So I mentioned one, which is SideSwap. Another one is Stocker, which is doing sort of fintech company doing securitization, regulatory work, and a share registration agent on a number of securities, but not all of them. Some are other share registration agents. So that's another one. But then, that there are more, right? So, a few years ago, there was the Fediment, which actually came out of Blockstream Research. So it's a kind of privacy technology inside a sidechain like federated mechanism. So it has higher privacy, higher scalability, but it doesn't, you can't audit it. So it makes a different trade-off. And there's a company who's building wallets around that, taking it to market. So that's cool to see. And then there's Arc, which is still in R&D, sort of a different kind of reactive security layer 2, something similar to Lightning in some ways. And now you've got BitVM, and all of these things added surprising new features or trade-offs that people weren't, didn't predict or see coming, right? So I wouldn't say it's over. And I think, the conversations about midterm Bitcoin getting consensus to add governance or something like that to Bitcoin would give that bit more flexibility to, implement or improve some of the layer 2s we have to make them more trustless. Like the layer 2s are always making a trade-off, and it varies between the layer 2. Some of them win on one dimension and not on the other. But, I would generally say that, the best place is the Bitcoin base, the Bitcoin core, the base chain, because, if there was any kind of bulletproof technology to improve it, it would already be in Bitcoin. So, of course, if you're putting something into a layer 2, you're probably trading off something for it. You've got a bit less security, but something will change, right?
Yeah. For people, when we talk about layer 2s and maybe if Bitcoin ossifies, I constantly think back to what Hal Finney himself said when he talked about this idea of, one day there's going to have to be Bitcoin banks. They're going to be a part of the scaling solution. And when we look at sort of Lightning wallets, custodial Lightning wallets like Blink, let's say the Bitcoin Beach wallet, the former Bitcoin Beach wallet, it's a pretty good solution for small amounts of Bitcoin. People equate it to I would keep as much Bitcoin on something like that as I would cash in my pocket walking around. Do you just think as we move forward, it's just going to be a ton of different options and all those options have different trade-offs, just because that's the way it has to be?
Yeah, I think that is the way it's evolving, that you end up with layer 2 specialized for different things with different trade-offs. And, it's an ideal world. You'd like, one layer that can scale infinitely and provide the, direct bearer security model that is one of Bitcoin's major selling points. But it seems to be difficult to achieve. So yeah. But new trade-offs do pop up. The nodeless Lightning wallet, which is actually a Liquid wallet that is using Bolt's exchange, just a swap provider, do submarine swaps between mainchain Bitcoin and Lightning, and then they added Liquid Bitcoin and Lightning submarine swaps, and then that became popular because of the JPEGs that we were talking about. They increased the fees temporarily, and now it's actually much more heavily used to swap between Liquid Bitcoin and Lightning. And there are actually a number of wallets that use that as their Lightning implementation. They just call this third-party API. It's trustless to swap in and out. And that it sort of gives you the same kind of advantage, user experience advantages that a custodial Lightning wallet like what Satoshi does, but without the custody.
Hmm.
So you've got the liquids security trade-off, but in some ways you've got a bit more privacy because it's confidential transactions. You have
Hmm.
stablecoin support because there's Tether and other stablecoins on there, and you have cold storage. You can receive funds when your wallet is offline, where Lightning
Right.
itself has to be online. So, I mean, one of the things, it's difficult to receive money if you're offline with Lightning. Now, with the nodeless Lightning, you actually can because, if the Lightning address you gave out was actually the Bolt's exchange and their server is ordering for swaps, right? So it'll swap it to liquid Bitcoin trustlessly, send it to your liquid wallet. So you could be offline, that could be in a hardware wallet even, and you'd receive it later. So
Yep.
you make it, you kind of got some cold security versus hot wallet, and you've got a federated security model. So there's like pros and cons all over this, right? Dimensions, but it is showing that new configurations can emerge, and that was really an organic discovery, right? It's like a
Yep.
sort of reaction to JPEG uh, stuff pushing up the fees, and then that made their on-chain swap almost stop working. So they looked around for an alternative, and here we are.
Yeah. Yeah, it seems like as issues arise, different types of solutions arise with it. I was speaking with David Marcus from Lightspark recently, and I asked him a similar question. I said, you're building on top of Bitcoin, this permissionless global protocol that you're not in control over. Um, do you ever just get nervous, like maybe there's we're not going to find the solutions we need to continue to progress the way that we want to? His response was no. It just seems that Bitcoin finds a way, whether that was the China mining ban and a lot of the hash rate leaving China. But he said we've seen this time and time again. Are you basically of the same mindset that we'll just figure out a situation, we'll figure out some sort of solution based on the tools available and what we can do given what the situation warrants?
Um, well, I mean, it's the technical people and the business people are always striving to find new innovations to give people more better use of different layers and easier use and safer backup and all these kinds of things, right? So it's not like everything is ideal, but it's a great deal of demand for the asset class and being able to pay with better internet money. So people will use what's available. Um, I mean, you can see in some cases, sometimes there's a difference between what the market adopts, which is just what users find convenient, a trade-off they like. That'll get use, and then maybe some technical people would say, "Well, that wasn't what I would have preferred, but I can see why they want it." Right? So, I mean, for example, with the nodeless, you don't really need the LSP because all the liquidity is actually Bolt's exchanges and liquidity, and they're managing the channels in the same way that Wallet Satoshi does, but without you needing to trust them. So it kind of answers the question in a different way.
Mm,
So I think you can see that users are just pragmatic and picking things that work, and then
right.
people are building products kind of try to be informed by that. If you want people to use things, you got to satisfy user problems, right?
Yep. Yeah. Yeah, absolutely. Let's switch gears a little bit. Talk a little bit. I think you've been on. I think it was CNBC. Been on some bigger programs recently, talking a little bit about how we're still there's still plenty of bull market to go. State of the markets right now. We're looking at. We'll dive further into this as well. But nation state adoption, more corporate treasury adoption. Are we in sort of the it's hard to say we're in the early stages of it because I think we hit a low in the late 2022 after the FTX drama and all of that. But do we still have a lot of room to run in this cycle if we are still, in fact, following a 4-year cycle in terms of Bitcoin's price?
Um, yeah, and I think it's still, 100,000 is not that high on the scale of things, if you ask me, because
Yeah.
in a lot of money printing since the previous cycle's bull market, where it got up to 69,000 temporarily, right? And
Yep.
then, what people didn't see coming was a second all-time high right at the end of the cycle at 73.5. So I think that
Mm-hmm.
was sort of the market showing it would have got higher if not for all the external factors, COVID and supply chain and economic effects of the money printing. So, so one argument is, well, 100 and something thousand, 103, 105, whatever we are when people are looking at this, is not that much higher than 69,000. So, and there's an awful lot of positive news in terms of, because there's the ETF approvals, which were before, but, there have been a lot of improvements in financial regulations, repeal of SCB 121, clearing the US custody banks to provide custody service to Bitcoin, clearing US banks to provide service to Bitcoin businesses, the different US states that are trying to bring in the state level treasury, the administration itself, the US administration talking about starting a sovereign Bitcoin treasury, or at least not selling Bitcoins they have. And then the other thing that was going on during the bear market in the last cycle were a whole wave of bankruptcies, which were like an overhang. So you had, the FTX bankruptcy, dragging on, selling Bitcoin and other assets. They didn't give people pro rata, their own assets back. They just sold it all for dollars at terrible prices. So, but now there is, they did end up with quite a lot of money there, because they also went and sold real estate and VC holdings, all manner of things FTX has spent money on, and like different clawbacks. So apparently they have about $16 billion, which people will start to get back. So I think that could be another catalyst, kind of the opposite of bankruptcy. There's a bunch of Bitcoin interested people who get their money back, and they're facing the dilemma: they either miss out or they buy it back at 4 times the price or something like that. Bankruptcy sold out, so that money could enter the market. I think the other thing, there's some data metrics that the BlackRock ETF bought by itself twice as many coins have been mined per day since the halving. MicroStrategy bought another twice as many, and there are increasingly more strategy companies now, right? There's just one announced today. David Bailey's
Nakamoto.
Yeah, so it's a kind of conglomerate of, a company they reversed into, a smaller public market company. Then BTC Media, which is a company that does the Bitcoin magazine and the Bitcoin conferences, like Bitcoin Miami. And then UTXO Management, which is a company that has been investing in other companies like Metaplanet and RPG. So that becomes part of this public share. So you've got a kind of treasury company squared, right? Because they are using their premium when they raise money. I mean, it's early, right? So I think a lot of this is probably not operational yet, but that's the plan. Once it gets underway and the money comes into it, that they can buy Bitcoin, but they can also buy with the premium that they would hope to capture, and then use some of that money to buy, private placements and pipes and stock in other treasury companies, which are themselves, selling equity at a premium or convertible notes and buying Bitcoin. So then, if part of that company, its claim on Bitcoin is indirect, its Bitcoin per share is the Bitcoin it holds, but also the Bitcoin pro rata that it holds in shares of other companies. And so it's an interesting experiment if that has higher velocity, like higher yield or a shorter number of months until the MNAV coverage, which is a kind of metric that tells you how long it would take for them to buy the same amount of Bitcoin they already have, kind of thing. And it varies between like 3 or 4 months, which is shockingly fast in the case of Metaplanet, and 19 months in the case of MicroStrategy. Well, strategy now, I guess we should say.
Yeah, it's interesting times with this. Does any of this sort of corporate adoption, or let's actually go back to the ETFs for a second. I think BlackRock now holds, what is it, over 600,000, 625,000 Bitcoin. Does anything about that potentially worry you? People argue that sort of Bitcoin is infiltrating Wall Street, and then other people argue that the opposite is happening, that Wall Street is infiltrating Bitcoin. How do you see it?
Well, I mean, the big picture, I think, is this is the arbitrage of the century, which is, we're going from the fiat current world to the hyper-Bitcoinized future with, which has got, and the size of that arb, probably $100 trillion or something plus, right? And so people are going to work out different ways they can arbitrage that. So individuals, They saw a property, they start dollar cost averaging, they figure out different ways they can assemble capital to buy Bitcoin, and then the companies get into it, governments are starting to get into it. That these are all people exploiting the same arbitrage, which is repricing the world in Bitcoin. So I think it's very, very scalable. And in terms of the kind of custody risk, because I think one of the things that people who have been in Bitcoin a while or are technical, looking at the bearer aspect of it. Now, of course, Bitcoin that you have yourself has an extra functionality, which is unseizable, and it's a kind of like asset protection or something, right?
Right.
And so I think you do need a certain reasonable proportion of the Bitcoin out there to be in the hands of individuals who are kind of the activist investors of the situation, right? If something happens in the network or trend emerges that they don't like, they're going to get vocal about it. And then, users who are in an ETF might take their Bitcoin out, or they might move it, sell it and move the Bitcoin to another product, right? So the market can react. And I think, ultimately the ETFs themselves are actually useful because it's an indirect way for people to get access to Bitcoin who might find it, not understand the risk and not want to take the risk of managing their own keys or something, right? So if I view it more like a kind of ease of use, accessibility to a different group of people, right? And then, the other thing you're seeing is very early institutional adoption. A few pension funds, a few sovereign wealth funds, but I think the overall percentage allocation in that is, well sub 1%. So there's a lot of scope for further adoption. And that also is, most of the money in the world is either directly or indirectly for the individual, right? So if it's in the mutual funds, there are people who have their savings or their monthly, savings plan flowing into those. So it's sort of helping people with their savings, or into a pension fund. It's helping, the average person who maybe doesn't self-manage their savings or have a brokerage account at all, right? So, they too would benefit economically from, carrying forward into the hyper-Bitcoinized future. You don't want to get left behind. So I think, it's still kind of shocking how smart, informed people in traditional finance and in industry, in businesses have not got it. But that's basically that fact is why Bitcoin is cheap. So the fact, that's the case just makes me feel bullish that, that explains why.
It's interesting to see. So we've seen obviously the Trump administration come out talking, in the EO, talking about establishing a strategic Bitcoin reserve, generally speaking, be much more friendly to Bitcoin, the broader crypto asset system, than the previous administration. Do you view this as a net positive as well? So, and I'll frame that a little bit differently. So Bitcoin, as many talk about it, the separation of money and state, is it paradoxical for the state to be embracing something like Bitcoin?
Well, I think they're just another type of economic actor, whether that's a private company or a public company or a pension fund, which is operated, on behalf of users, or an endowment, which is operated on behalf of the university and money that's been given to them. So it's a bit odd to see, a major government do that, because Bitcoin delivers things to the market, 5, 10 years, 20 years before you expect that would ever be a thing. But here we are. I think the positive part of it is, unlike the former administration, they're not proactively trying to, put friction in Bitcoin's way to, make it difficult to get bank accounts with business, things like that, right? And we'll see how the sovereign Bitcoin reserve plays out. One the kind of minimum one is that they don't sell the seized Bitcoin, which typically law enforcement sell anything they get that's seized, right? And of course, there's some infamous examples. Germany sold the Bitcoin, and if you go back and look at it, there was some seized Bitcoin bought in auction years and years ago. And of course, the government gave it billions and billions by doing that, right? So, I guess it comes back to the phrase that people buy Bitcoin at the price they deserve. And I was kind of thinking governments deserve to pay, into the 5 million range, but if some are a bit smarter and buy cheaper, like, that could moved a price regime forward because, there are already a few sovereign reserves and a few countries with Bitcoin or doing Bitcoin mining, but they are, you built the Abu Dhabi sovereign reserve, and that's a big reserve, but it's a small allocation so far, and it hasn't caused, the FOMO where other countries like using doing something decisive and copy them. And I think it's because it wasn't big and bold enough yet, right, percentage wise.
Yep.
But if you see a major country like G7 country or top 40 country by economic weight in the world take a decisive direction, I think it'll cause the others to start to think tactically. What do they do about that? Because if they do nothing, they can see that the decisive action to invest will impact the market, so they've got to react. But really, it is surprising that they haven't figured this out already, because effectively it's a bit like prior shifts. So, of course, gold is too long ago. Nobody knows the history of that kind of transition from the pre-gold to the gold period. But we do know from history, discovery of black gold from the oil, petroleum, internal combustion engine, and now it's a massive shift, right? And if you add up the market value of all of the petroleum-related companies in the world, it's like trillions, right? It's really a big industry. And so, if you would imagine, and the countries that had, large oil reserves when internal combustion engine gasoline was discovered, it changed the balance of power, right? They became wealthy and economically significant, had leverage. And so, here we are today. We've got the digital gold discovery, not black gold. And there are countries sitting on, 100 gigawatts of hydropower, let's say, and doing nothing, So they're not seizing the opportunity. You scroll that forward 20 years and they'll, people will be using their tactical reserves and capabilities of their country to try and change their standing in the world. So, yeah, still early.
I'm curious, do you think that that's mostly based on ego? Maybe the leaders of those countries seeing something like what Ethiopia has done with the massive hydroelectric operations that they have, what Bhutan has done with their hydroelectric operations. These countries, are mining a significant amount of Bitcoin. I think with Ethiopia, they're doing a little bit more selling for dollars, whereas Bhutan had a bit of a hodl strategy. We have some significant examples on the table already, and I especially think about maybe smaller countries like Bhutan or countries of comparable size. It just seems like a no-brainer to be paying attention to what a country like that is doing and to come up with some sort of similar blueprint. Is it ego? Is it a fear that maybe by legitimizing Bitcoin, you're sort of legitimizing something that might challenge the power of the state? How do you think, what do you think the people who are sort of staying away? Yeah.
I think they are just skeptical, and governments are not innovators. The people that want to do innovation generally want to be an entrepreneur, start build a product. So it's just sort of a bureaucracy, and I think they just remain skeptical, right? They see Ethiopia doing it, but they're like, yeah, but it's small. But Ethiopia is economically not that big a proportion of the world, so they can kind of write it off, right? But I think there are things they won't be able to write off, and they may happen, in not too many years, perhaps in less years than we expect, right? And I think it could be one of those gradually then suddenly things, because if a major government makes some tactical, the kind of Bitcoin plan that Senator Loomis was talking about, to buy 1 million Bitcoin over some period of years, the fact of the identity of who's buying them more than the actual market impact of that money being bought, I think would change everything, because the other countries would feel they had to do something then, whereas now they can just kind of ignore it. We talk about the countries and the politicians, but look at the public companies, right? You've got Dell, like they tried a shareholder approval to buy Bitcoin, got massive cash reserves. They said no. Got other companies with big cash reserves, like Microsoft, Apple, Berkshire Hathaway, huge cash reserves. Like on the sidelines, no coining while their dollars are shrinking, right? So I think the thing that helps let's talk about this arbitrage. Is the arbitrage in the fiat current and the hyper-Bitcoin's future is such an extreme advantage, but you just give it some years in the market, and people who don't believe just shrink in economic relevance. So,
Hmm.
they don't have to buy, but they'll become less significant, and their big lead in capital base will change. And yeah,
Do you think it's also much like we see maybe what gets termed zombie companies? And it's interesting. I was speaking with Eric Semler about this. He even termed himself that, though the company had share flow, and he was saying they were sort of a zombie company as far as the public market was concerned. They weren't seeing a lot of excitement. Do you think some of the El Salvador, the move that El Salvador made in getting into Bitcoin, even Bhutan as well? Do you think it's the people who might be in a sort of a more vulnerable situation, or the institutions, countries, et cetera, that are in a bit more of a vulnerable situation versus, as you just said, the Apples of the world, the bigger companies that are on top of the world right now? They see no sort of reason to have Bitcoin because they have everything else going for them right now. Whereas some of these other institutions say, like, well, if we're going to survive and if we're going to compete, this is really our only option. Does that tend to be the thing that continues to knock the dominoes over in terms of smaller institutions and even
yeah.
nation states getting involved?
I mean, I think it's a bit like the individuals too, right? For the people who the establishment order works for, they got themselves on a career track, they're making
Yep.
a decent amount of money, they have a comfortable lifestyle. Then the idea of doing some kind of bold, high risk thing like quitting a job and starting a startup to build products, taking very little pay for some years, they're not going to do that. As most entrepreneurs actually are not. You know, they didn't start on a career track, or they didn't have formal education to get on a track to become a medical doctor or a lawyer or accountant or a dentist, something like that, right? So it's just statistical
Right.
motivation. And then I think that extends to countries too, right? So, you know, the larger uh, developed countries have advantages. They've got the capital. It's the smaller, economically more challenged countries that are struggling, under debt loads and IMF loans with strings attached and all this kind of thing. So, if you've
Yep.
got a problem and you don't have a lot of options, you're going to get creative to try and solve it. And so it's a really good thing to see what El Salvador has done on that front. I think you can see it. And I think the other thing is, if you go back a few years, surely most people have seen the Matrix movie, right? So basically, the people that made their way into the Matrix, the kind of imaginative ones, say, maybe programmers or techies, and the disenfranchised, like basically people who were not having a good time in the establishment world. That's kind of the story for Bitcoin, but it scales. Like the thing that is kind of impressive is how it scales and influences things. But now
Yep.
you've got a lot of politicians in different layers of the government. Hence all of the state initiatives to bring a Bitcoin reserve and different finance and economy related ministers throughout the current administration, and it's bipartisan too. There are Bitcoin fans on both sides of it, so that shows that it scales upwards, and so so far it's worked very well. That Bitcoin has influenced the economic thinking of individuals, and then companies, and then governments, and
Yeah.
everything continued to work.
Yeah, yeah, absolutely. One of the things I'm always curious about when I think of you, you're very mild mannered. You're always sort of a calm voice in the conversation, which is very much appreciated in a place where things can get kind of tense and people can get heated. Also, your work, obviously, proof of work, something you designed. You're cited in the Bitcoin white paper. You've been in Bitcoin for a long time, and again, you always sort of seem to be very calm about things. But I'm curious, what excites you? What surprises you about this current era of Bitcoin? What has you sort of just thinking, wow, we're here already?
Well, a lot of these metrics are further forward. This year is a lot different to last year. I mean, kind of surprising is that we're only $100,000. Yeah, it seems
Okay.
kind of odd based on the metrics. And in terms of progress, I think one thing to bear in mind is that a lot of the institutional adoption, sovereign wealth fund, pension funds, all of these type of entities, they can, some of them still in the decision process, or even when they decide and announce that they're going to do something like, a, a retail brokerage or pension management fund is going to make Bitcoin available to their clients or add it to a product. It can take them 6 months to do that because they've got to train
Right.
people. They've got to work out playbooks. They've got to do financial modeling. They've got to get lawyers involved, see what they, how they should correctly sell it. And so, people are looking at the Bitcoin social media, and in some ways they're expecting, immediate reaction to some news. But it affects sentiment perhaps, but it doesn't always affect the fundamentals for a little while because they'll still have to implement it. And I guess a lot of people won't be familiar with, you know, how many committees and accountants and lawyers and boards and so on have to sign up on things to
Right.
get things actually moving in a big company.
Yeah, that makes sense. Yeah, absolutely. Anything else we should be keeping an eye on? Something that Blockstream is working on? What's happening on Liquid? Some upcoming anything we should be paying attention to?
Well, we should have some announcements at the Vegas conference, so we'll get to those. And we're
Cool.
just excited to, um, keep expanding the product lineup. We had good reception from the original Jade and now the Jade 2 hardware wallet,
Yeah.
like Bitcoin only hardware wallet that supports also Liquid, so you get stable coins and so on around that, and trustless trading. There are a number of platforms that let you do trustless trades actually with the trades enforced by the hardware wallet itself. So you'll do the web experience set per trade, and then you'll get to confirm the trade details on the hardware wallet, and the assets in the trade stay on the hardware wallet, so you don't have any kind of platform risk, which is something people are very conscious of since the FTX most recent failure. But there was a long line of similar things stretching for the years before it as well.
Right. Yeah. For those who are new, right, there's been plenty of other blowups in the space before it. Well, Adam, just want to say thank you so much for taking the time out of your day to speak with us. We sincerely appreciate it. We look forward to the announcements at the conference. And yeah, thank you again.
Thank you.